Welcome to this explainer. Today, we're looking way beneath the surface of the energy drink industry. We are unpacking a genuinely fascinating dynamic, how an $89 billion beverage giant might actually be losing its iron grip on the market, even though their numbers look practically unbeatable on paper.
I mean, it's a question that totally defies traditional business logic, right? How does an $89 billion behemoth start to lose its footing? Well, to answer that, we're going to explore a somewhat hidden battle playing out right now in the beverage aisles. It's a massive tug-of-war between old-school, brute force brand awareness and a highly efficient, laser-focused metric called mental market share. And as you'll see, these agile challenger brands are absolutely weaponizing this metric to chip away at the giants.
Section 1. The Energy Drink Goliath.
Okay, so before we can really talk about the challengers, we absolutely have to establish the sheer, massive surface scale of the incumbent here. Just to put their dominance into perspective for a second, in fiscal year 2025, Monster generated a staggering $8.29 billion in revenue. That is an 11.7% jump from the previous year. Numbers like that firmly cement their position as an absolute global heavyweight in the consumer defensive sector. They aren't just a big company, they literally define the category.
And you have to look at how they generate that massive revenue. It's fueled by a seriously extensive portfolio. They aren't just selling that classic black and green Monster can anymore. They've aggressively expanded into performance energy with Reign in their recent acquisition of Bang Energy. They've got legacy brands like NOS and Full Throttle. They've even pushed into the alcohol sector with craft beers, hard seltzers, and flavored malt beverages like the Beast Unleashed. They are casting an incredibly wide net.
But honestly, perhaps their biggest weapon of all is their distribution network. Back in 2015, Monster locked in a long-term strategic partnership with the Coca-Cola Company. This gave Monster unparalleled access to the most powerful beverage distribution system in the world. It practically ensures their cans are within arm's reach of consumers, anywhere on the globe. From the outside, it looks like an impenetrable structural advantage.
Section 2. Cracks in the armor.
So beneath this Goliath-like surface, a recent report from Spruce Point Capital Management highlights some pretty severe subsurface threats. When you track the top 3 brand dollar share from 2022 to the end of 2024, the data tells a really interesting story. The overall energy category is still growing, sure, but Monster, which you can see represented by that dotted green line, is experiencing slowing domestic growth and is actively losing market share. Now look at that solid orange line. That's Celsius, just steadily rising and eating into the market.
Furthermore, Spruce Point points out that Monster is becoming increasingly dependent on Amazon for its sales. Now you might be wondering, why does that matter? Well, because selling through Amazon carries much lower contribution margins compared to traditional retail. Plus, just look at the heavy promotional discounting happening here. We're seeing 25% off tags alongside active promotions for SNAP and EBT government food subsidy programs. That right there screams pricing pressure and a reliance on lower margin channels just to move volume.
We're also seeing some real vulnerabilities in their international distribution, which, remember, is supposed to be their ultimate safety net. For example, in 2023, Coca-Cola Andina, which is one of the biggest Coke distributors in Latin America, actually dropped Monster's Burn brand from its portfolio in Brazil. After bragging about spectacular growth in Brazil, Monster's sales there suddenly flattened out and then declined, with the company citing inconsistent purchasing patterns by their bottler. So maybe that armor isn't quite as impenetrable as everyone thought.
Which brings us to Section 3, the challenger threat.
This is where the agile challengers come in, and they are actively exploiting these exact cracks by playing a completely different game. First off, they're riding a massive shift in what consumers actually want. As these AI query summaries highlight, there is a growing heavy health stigma attached to traditional, highly caffeinated, sugar-loaded energy drinks. Consumers are so much more aware now of the risks of sugar overload and synthetic additives. And that shift? It has blown the doors wide open for new brands that position themselves around clean energy, wellness, and functional hydration. So who exactly is running this new playbook? Well, you've got brands like Celsius, who managed to secure a massive distribution deal of their own with Pepsi in 2022. You've got Alani Nu, which by the way was just acquired by Celsius in February of 2025. Then there's Ghost and C4. These companies aren't bothering with traditional advertising. They are leveraging social media, fitness influencers, and a healthier lifestyle aesthetic to rapidly steal shelf space. They are going straight to your social feeds.
Section 4. Awareness versus mental market share.
To truly decode why these challengers are winning, we have to look past the standard financial reports and understand this concept of mental market share. Now, this is not the same thing as brand awareness. Brand awareness just means, hey, I know your product exists. Mental market share is way more specific.
It measures how often your exact brand pops into a consumer's head when they hit that 3 p.m. afternoon slump and think, man, I really need a drink right now. It measures mental availability at the precise moment a purchase is triggered.
When you look at this data juxtaposition, it is absolutely wild. Monster has massive 75% broad awareness, which translates to a 17% mental market share. But look down at the bottom of the table. Alani Nu only has about 20% brand awareness, yet they actually beat Monster on emotional connection, scoring as 3.5. And here's the kicker. Among the 20% of people who actually do know about Alani Nu, they convert that awareness into a real purchase occasion at incredibly high rates.
In fact, Morning Consult refers to Alani Nu as a coiled spring. They convert the few people who actually know them into mental presence at the exact same efficiency level as the absolute industry leader, Red Bull. Think about that for a second. Their problem isn't making people like the drink, their only problem is pure visibility. Whoever owns this brand, which again, as of 2025 is Celsius, has a massive, massive growth lever in their hands. They don't need to build affinity from scratch, they literally just need to buy awareness, and the sales are going to spring forward.
Section 5. The Future Battlefield. So, what does this all mean, and how will this psychological warfare dictate the future of the entire energy drink category? Well, the strategic split is incredibly clear right now. The incumbents, your Monsters and your Red Bulls, they're defending the generic, I need an energy boost to get through the day moment. It's a pure volume game relying on them being the default choice. But the challengers, they are aggressively capturing secondary, highly profitable triggers. They own the I want a mood boost and the I want a flavor I actually enjoy occasions. They're winning on personality and premium experience, not just basic utility.
And let me tell you, these challengers are finding highly profitable, specific niches that the incumbents have historically struggled to capture. Case in point, Alani Nu's mental market share nearly quadruples among women, coming in at 6.5% compared to just 1.7% for men. This gives them a very distinct, incredibly targeted demographic lever to pull for massive growth, especially when you consider that Monster heavily skews toward a male demographic.
As Morning Consult perfectly points out in their report, the future of this industry isn't about simply outspending your rivals to build raw awareness anymore. That's the old game. The new game is all about who can take a narrow, intense, emotionally connected following and successfully expand that real mental estate across different daily moments and entirely new demographics.
The challengers are proving every single day that mental availability and high-efficiency conversion can genuinely threaten pure brute force scale. So, leaving you with that provocative thought, as mental availability starts to beat pure scale, who is ultimately going to win these energy wars? Is the era of the undisputed beverage Goliath officially coming to an end, or is Monster going to figure out a way to pivot and reclaim its mental market share? Thanks for joining me for this explainer, and we'll see you next time as we continue to break down the data driving the markets.